again. Next step of the accounting process. We're still dealing with inventory and the perpetual inventory system, but now instead of dealing with purchase of inventory, we're dealing with sale of inventory. So that's probably the trickiest aspect of this entire course, is getting your head around the sale of inventory, because it has to have special treatment. So I'm going to go through and show you why it has to have special treatment, but ultimately the reason is that we're trying to sell something for a higher amount than what we bought it for in order to make profit, so therefore we can't treat it like we would have done using our old strategies that we've adopted so far. So let's have a look at this example here, and this is showing you why we can't do it the old way. So our first example is we purchased inventory using cash for $200 and $20 GST. So with that, the purchase of inventory is exactly the same treatment as what you've been doing. Nothing changes for the purchase of inventory. So you buy inventory, $200, you've got GST credits of 20, and then we purchased it using cash. If it was for credit, then obviously we would have a creditor for the total of 220. So that's all good. We then get to selling that inventory. Now, if we were to use our old method of treating that, if you sold inventory for cash, the two entries would be inventory and cash, and GST as well if that's included. So let's do that, and you'll see then why we can't do it. So sold inventory for $300 plus $30 GST. So our inventory is decreased by $300. We've got GST payable of $30, and we used $330 cash, or we received $330 cash. So if we look at the result of what's occurred with that, ultimately, if we were to balance this account, it would indicate that we have got a balance of $100 on the credit side of an asset account. So ultimately we're saying we've got negative $100 worth of inventory. You can't have negative $100 worth of inventory. The cash amount's correct, the GSTs are correct, but we can't have negative $100 worth of inventory. So we can't treat it the way that we've been doing. Okay, so we're now going to look at how to do sale of inventory correctly using the correct process. So I've adjusted this here. So selling inventory, we're selling it at a profit. So we're generating income. So we can't just have assets increasing and decreasing because income is involved. So when we're dealing with a sale, we must account for the sale price. That's our income. So whatever we've sold it for, because we're selling it for greater than what we purchased it for, we're selling it at a sale price, generating income. So we'll deal with that in a moment. And then the second part, there's two parts whenever you're selling inventory. And the second part is we have to account for the cost of what we sold. So what I mean by that is, here we purchased $200 worth of inventory. Here we sold that $200 worth of inventory for $300. So looking at the two parts, we account for the sale price, which was the $300 plus the 30 GST, and then we must account for the cost of what we sold, which is going to be the $200 worth. So there's two entries that we must deal with. Not always will we be selling the full amount of what we purchased up here in our sales. So a lot of the questions that you'll get is we purchased $200 worth, and then the next transaction was we sold $20 worth of that inventory for $30, and then the next transaction we sold $30 worth of that inventory for $40, etc. So the cost of what we sold is always the amount that we're selling of inventory, and then how much we sold it for is the amount of sale price. So I've broken down what we need to do down here, so you'll be able to see what we do in the ledgers. The sale price was the $300 plus the $30 GST. So that's the first part that we deal with, and then obviously the cash at bank that we received was $330. The cost of the sale, again the value of the inventory that we sold, is actually known as the cost of sale, $200. That's our expense. That's how much it cost us to be able to make a sale of $300. And our inventory is decreasing by $200 because obviously we've sold $200 of inventory, but we happen to sell it for more. So the accounting process, what you do in ledgers. I've already got up here the purchase, which we're well and truly aware of. Purchased inventory 200, GST credits 20, and cash at bank decreased by 220. So now we're looking at the May 3 transaction where we sold that inventory for $300. So firstly, we're going to account for the sale price. So that's the selling of the inventory for $300 plus $30 GST. So because we're generating income, it becomes, whenever you're selling inventory, it becomes sales, which is an inventory account. Sorry, an income account. The income account is a credit transaction. So May 3, sales $300. The GST payable is the GST component when you are selling something of $30. And then the total of that, 300 plus 30, goes into cash at bank, 330, with appropriate cross references. So that's number one, where we've accounted for the sale price. The second part is we need to account for the cost of the sale. So what did it cost us to get the $300 in income? And the cost was we had to buy $200 worth of inventory in the first place to be able to sell it for the $300. So to account for the cost of what we sold, it is the value of inventory that you originally purchased that got sold for the $300. So that's the $200 worth of inventory. So on May 3, the second transaction is cost of sale $200, and then our inventory has decreased by $200. So if we were to balance those now, we end up with $0 worth of inventory, which is perfectly correct because we purchased $200, we then sold that. So we ended up with no inventory. But we sold it for $300, so we've got $300 worth of income, which is great, and we've got the cost of sale, which is the expense, of $200. So that whole thing, when we put it all together, if we were solely to look at our incomes and our expenses, we've got $300 income, we've got $200 expense, so we made a profit of $100, which makes perfect sense because when we purchased it, originally we spent $200 to get it, and then we sold it for $300, so we made a profit of $100. So that is how to deal with sale of inventory.